Afternoon, ladies and gents. So welcome to LAT and Market Insights. As we come to the close of the week, a few headlines which have taken centre stage this week, and we're going to have a run through those. We'll have a look at the reaction of some of the charts and some of the trading opportunities that could have presented themselves. So first and foremost, out of Italy, Mario Draghi has resigned as the Italian Prime Minister. Now, a fairly inevitable outcome. He lost key allies, those key allies withdrawing support. Now, of course, the big question mark here for Italian government going forward is, are they going to land in safe hands? They've, of course, got a 20 billion euro recovery fund, which Italy, provided they continue on the reform path, entitled to that full 20 billion. So from a governmental point of view and next steps for Italy, whichever government is elected in and whichever prime minister is next to take up the reins, it's going to be a big battle for to reassure and provide confidence that those reforms are going to continue, and Italy remains in safe hands. The initial reaction was negative off the back of his resignation. We can just see the chart here on the left hand side, the FTSE MIB here, so the Italian 40 index. We just see a beautiful technical level, to be fair, acting as resistance this market to move lower. Now we're just finding support down here at some of these previous lows, but certainly this downtrend still continuing lower. And for now, the response, the initial reaction to Mario Draghi losing that support, and therefore the risk that now is involved in terms of losing and failing to follow through and receive that recovery fund right at the forefront of people's minds. So at the moment, opportunities here potentially still short. At very early doors to start calling this potential inverse head and shoulders. For me personally, I would much rather recognise this is still a significant downtrend. The last move here was still to break down through some of these lows, these previous lows, breaking down to new lower lows, and therefore expectation for this trend to continue lower. Now it's received a little bit of support here off the back of the slight rally in the equity markets that we've seen through the US and European session. If we're just coming across to the S&P 500, and we're looking to close out what has been an incredibly positive week for the S&P 500, breaking through and out of some of these dominant ranges, just taking a little bit of a breather up here at that 4,000 big psychological round number that's just holding for the time being, but a general risk on tone, and that's just helping keep that the FTSE MIB up for the time being. Okay, beyond that, Russia has resumed Nord Stream 1 gas supply, and of course Europe has been sort of locked in a battle here, in a war with Russia. And it's been an energy war, really, with the supply of natural gas. Now, of course, immediately they had a 10-day outage put down to maintenance. Russia put it down to maintenance on the Nord Stream 1 pipeline. And, of course, that put severe fear through European nations as gas supplies were looking to be cut off coming into this winter. There had been challenges put forward to try and reduce the use of gas supply by 15% by European nations. This has been largely kind of disregarded and disapproved, and people were not interested. Nations such as Portugal not interested in following through with that. Russia have now activated Nord Stream 1. They are now providing gas supply into Europe. However, even before Nord Stream 1 went down, we had seen they were operating at 40% of their full capacity, and that shortage is still there today. So although the gas Nord Stream 1 is back up and running, there is supply coming back into Europe, which will help ease tension slightly. Put very simply, it is not enough to sustain European needs and demand. They need Nord Stream 1 back pumping at full outage, and as we said, they're currently running at a 40%. Now, the natural gas chart itself has had a positive run, largely due to that outage that we've seen over the past 10 days. And interestingly enough, Nord Stream 1 has come back to life this week, that 40%. But natural gas, that should really increase supply, reduce demand, to see natural gas prices move lower. We haven't seen that as of yet. Now, that's likely because, as we said, it isn't enough. It isn't enough to sustain the European needs. What is interesting is just looking at this chart on the top right. We've got these previous lows which were set in from the 31st of May. Big significant selling pressure coming from in and around this 8 marker. 8.5 is going to fall in line with this R1 monthly pivot point, and we're just on this row. We're just failing at the moment to close up through this level, and potential opportunities here. I think if we come down to slightly lower time frames, this is a lovely uptrend. Respects these moving averages beautifully and moving higher up towards, like I said, that big round number of 8. If we can see this turn away from here and perhaps start to break down through some of these lows, 77.6, 7.5, probably that 7.5 psychological round number here. If we can get a breakdown through some of those levels, perhaps that's a reflection then of that increased supply and the less fear and concern in the market at the moment. So natural gas here, Russia, again, still holding all the cards here really, but opening up that Nord Stream 1 pipeline, allowing 40% of its production through and just easing some of the pressure that we've seen through these European markets at the moment. Okay, and of course it's Europe which took centre stage yesterday with Christine Lagarde and the ECB. Coming into that announcement, it was a debate, are we going to see a 25 basis point hike or a 50 basis point hike? The odds had it pretty much priced in at a 50-50 at the point of the release. Ultimately they came out with a 50 basis point hike in line really with a lot of the other central banks, and the initial response off the back of that was positive. Okay, it was taken as a hawkish stance, hawkish tone. We saw euro move higher, we saw the bond markets, the European bunds move lower off the back of that data, yields also moving higher, but it was very short-lived. Of course the Eurozone globally around the world the closest to recession here, looking at of course for a technical recession 2 negative quarters of GDP, one already in the bag, second not far away, so recessionary fears very, very close. So whilst there was some upside here in the euro, very, very short-lived, immediately were reversed back at these highs, beautiful highs here, 102.68, traded back lower to where we began at the start of the day, a slight move lower this morning, now very much range bound, and we're seeing a little bit of positivity filter through here. Now rather than euro strength, a lot of this here is there's a little bit of dollar weakness in the market as we've seen equity markets rally over the course of the day. So, you know, pretty short-lived positivity off the back of that more hawkish ECB. And now, of course, the dominant trend here in euro-dollar immediately back in question here on the daily chart. Are we going to see a move back down through parity once again? Failed, of course, to close below parity here on this daily time frame. See this beautiful hammer formation back at that 1-to-1 level. Bullish hammer, bullish engulfing coming in, and then this market moving higher. And it just looks like for the time being, whilst we're sort of in these sideways, a little bit of indecision, we've got an S2 monthly pivot point, and we've also got some previous strong buying, and these lows which were put in on the 19th of July are the lows which were caused when policy members and ECB committee members started coming out, and there was discussion come the start of the week of where we're going to see that 50 basis point hike. So euro dollar remains largely trapped, showing some positivity today just in line with the general risk on tone that we are seeing, but overall pretty much unchanged, not a huge amount of movement to come close of the week. Okay, so I think opportunities here for a trade. I think what's got my attention probably natural gas, top of the list here. We're just at this eight round number, big significant level. See these big previous lows coming in, strong selling pressure. I like the fact we've had an attempt to run up through this to 8.5s up to that R1 monthly, and I certainly think there's opportunities for perhaps for us to come off this level and start moving lower. Now, I can make that call now. Okay, as we said, we've got to see some breaks, got to see the end of this uptrend before we start turning negative on this, but a reasonable level I think to look for some opportunities to be short, and that will make our way back down, probably back down towards the 7, back down towards 7s, which is down through here, which puts us just above that next pivot point, and also support going to come in from the moving averages here all across this 4-hour time frame. Okay, so relatively quiet week all in all. ECB probably taking centre stage and provides some volatility, but nonetheless Mario Draghi and the Russian Nord Stream 1 gas supply also providing some volatility. Okay, that's it from us this week in terms of the major headlines. Let's have a quick scan across and have a look at the economic calendar for next week. We'll see what's coming up and see what we need to keep our eyes peeled for, shall we? So just fire up that economic calendar. Let's have a quick scan across now to next week. I'll just filter this through. Of course, come the end of the week, we're not particularly interested in low, medium impact data. I just want to see high impact data coming through next week. And as we see, a very, very quiet economic calendar. The big figure here will be GDP for Friday for the Eurozone. Of course, we're looking for two contraction back-to-back quarters for a full technical recession by definition. So all eyes towards Eurozone GDP, and then the US interest rate decision on Wednesday. So two big hitters there. The rest of the week, very, very quiet, not a lot to go at. But of course, the FOMC, Jerome Powell, fully in focus for middle of the week next week. Alrighty, that's all from us here at LAT. Please do join us next week for another weekly market insights.